What if 73% of people who chase passive income quit within 6 months? Not because it doesn't work, but because they started with the wrong ideas. Today, I'm breaking down 5 passive income strategies that actually work in 2026. And by the end, I'll show you the one mistake that costs beginners thousands of dollars and years of lost time. Welcome to Moolah IQ, where we make personal finance, investing, and trading simple. Here's what most passive income advice gets wrong. Most advice falls into 3 traps: too unrealistic for beginners, requires too much starting capital, or isn't truly passive. But here's the thing. Real passive income does exist. It's just slower, quieter, and less exciting than influencers make it sound. No hype. No make $10,000 while you sleep promises. Just honest options you can start building today. What passive income really means. Let's clear something up first. Passive income is money you earn without actively trading your time for it, at least not continuously. But here's the part most people skip. Passive income means you no longer trade active effort for every dollar. But it doesn't mean earning is effortless. Effort is required, just not continuously. Almost every passive income stream requires one of 2 things up front. Either a time investment, building something now that pays you later, or a money investment, putting capital to work so it grows on its own. True passive income starts only after setup. The setup phase demands effort and isn't passive. Think of it like planting a tree. You dig the hole. You plant the seed. You water it for months. Eventually, it bears fruit without daily labor. But someone who never planted anything doesn't get to harvest. Now here's where it gets interesting. Let's look at 5 realistic options, starting with the simplest. Idea number 1. High-yield savings accounts. This is the most boring passive income idea, and that's exactly why it works. Here's how it functions. You put money in a high-yield savings account. The bank pays you interest every month. You do absolutely nothing else. As of 2026, many high-yield accounts pay between 4 and 5% annually. That means if you have $10,000 in one of these accounts, you're earning around $450 a year. That's about $37 a month for doing nothing. It won't change your life, but high-yield savings is truly passive, completely safe, and an ideal way to start. Your emergency fund should live in an account like this. The money needs to be accessible, and it might as well earn something while it waits. If your savings are currently earning 0.01% in a regular checking account, moving them takes 15 minutes and pays you forever after. But wait, there's more to this. Idea number 2. Dividend investing. When you buy shares in certain companies or funds, they pay you a portion of their profits regularly, usually every 3 months. These payments are called dividends. Here's a realistic example. You invest $5,000 in a dividend ETF. That's a fund holding many dividend-paying stocks with a 3% yield. Annual dividends? $150. Quarterly payments? About $37.50. That might not sound impressive, but here's where it gets interesting. If you reinvest those dividends, meaning you use them to buy more shares automatically, you create a compounding cycle. Your dividends buy more shares, those shares pay more dividends, and the cycle continues. Over decades, this quiet cycle builds real wealth. Many retirees live entirely on the dividend income they spent years accumulating. For beginners, dividend ETFs like VYM, SCHD, or DGRO are simpler than picking individual stocks. You get diversification and steady payments without needing to research dozens of companies. Idea number 3. Index fund investing. This one overlaps with dividends but works differently. Index funds track the overall market, like the S&P 500, which holds 500 of the largest American companies. Instead of picking winners, you own a small piece of everything. Your passive income comes from 2 sources: the fund's small dividends and its growth over time. Here's the math. If you invest $200 a month starting at age 25, earning an average of 8% annually, by age 65, you'd have around $590,000. You contributed about 96,000. The rest, nearly 500,000, came from growth. This is passive wealth building at its purest, steady compounding growth over time. Index funds require no stock picking skill, historically outperform most active investors, and work on a simple principle. Start early, stay consistent, don't panic when markets drop. Now, pay attention to this part. Notice that the first three ideas all share something in common. They require money to invest. If you don't have extra cash right now, these might feel out of reach. That's okay. The next two ideas require more time than money, and they're where many beginners actually start. But hold on to this. Small amounts, $50 a month, $20 a week, add up over the years. The goal isn't to start big. The goal is to start. Let's go deeper into these options and break them down further. Idea number 4, digital products. This is where passive income gets more interesting and more uncertain. The concept is simple. You create something once, a template, a guide, a short course, a printable, and sell it repeatedly without recreating it. Examples include budget spreadsheet templates, resume templates, Notion or Canva templates, short how-to ebooks, or mini courses teaching specific skills. Look, here's the reality check. Digital's products require significant work up front. You need to create something valuable, set up a way to sell it, and find people who want to buy it. It's not passive at the start. Once built and selling, it can earn while you sleep, for months or years. Here's what actually sells. Products that solve specific, small problems. Not complete guide to life organization, but one-page weekly meal planner template. Specificity wins. A simple budget template priced at $12 on selling 50 copies a month generates $600 monthly. That same template can sell for years with minimal updates. The catch? Most digital products sell very little. Success requires either great marketing or filling a genuine gap no one else has addressed. Idea number 5, content creation. This one comes with a significant asterisk. The idea? You create content, YouTube videos, blog posts, podcasts, that earns money through ads, affiliate links, sponsorships, or product sales. The passive part? Once published, a video or article can earn for years without additional work. A single well-ranking YouTube video can generate thousands of dollars over its lifetime. The non-passive part? Getting there requires consistent creation, often for months or years, before meaningful income appears. Think about it. Most YouTube channels never reach monetization. Most blogs earn under $100 a month. Success typically requires 1 to 2 years of consistent effort before passive benefits appear. But if it works, the upside is essentially unlimited. Finance and education channels can scale to significant income, but only for those willing to create without immediate reward. Content creation is a long-term bet on yourself. It's not for everyone, but for those who genuinely enjoy making things happen, the potential is unmatched. The real cost of inaction. So let me ask you directly, what is the real cost of not starting? It's not just missed income. It's the compounding you'll never recover. Every year you wait, you lose time. And time is the ingredient that makes passive income powerful. A 25-year-old who invests $100 a month for 40 years at 8% ends up with over $350,000. A 35-year-old doing the same thing for 30 years ends up with around $150,000. That 10-year delay costs $200,000. Not because of bad choices, just because of waiting. The best passive income strategy: use what you have, where you are. Your action step. Here's what I want you to do this week. Pick one idea from this video, just one, and take one step toward it. If it's high-yield savings, research accounts and move your emergency fund. If it's investing, open a brokerage account or set up automatic contributions to an index fund. If it's digital products, outline one idea based on something you already know. If it's content, publish one piece. A video, a post, anything. See how it feels. That's it. One step. The goal isn't to build an empire this week. The goal is to plant one seed. Passive income isn't a shortcut. It's a long game. The people earning money while they sleep put in work while others were sleeping, months or years before the income became passive. But here's the good news. You can start today, even small, even imperfect. Small seeds, planted consistently, grow into something real. If this video helped you see passive income more clearly, take a moment to like and subscribe. And leave a comment telling me which of the 5 ideas you're most interested in trying. I will read every response, and your answer might spark a future video. Remember, money grows faster with clarity than with excitement. This is Moolah IQ, helping you increase your financial IQ one wise decision at a time.